Going YouTube, my name is Ari and welcome to Blue Lion Finance, a channel, as most of you probably already know, dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. And let me be the first to tell you that with every single step forward, it seems like we are taking 2 steps back amidst these market conditions. Just this past Friday, the Dow and S&P tumbled by nearly 3%, with the Nasdaq not too far behind, falling by 2.5% after Federal Reserve Chair Jerome Powell came out with a more hawkish tone regarding more aggressive interest rate hikes to come, which we're going to cover in today's video. But as for my personal account, certainly tailed the rest of the market, falling by $1,965.48, bringing my account total to $88,781.80 on the day. Now, while these market conditions aren't necessarily seeming too favorable for us all,
Everybody panic! Oh my God!
as for the long-term value investor, these are ripe market conditions for us to double down on high-quality investments, which is exactly what I want to get into in today's video. I'm talking about the 1 stock position I've actually sold out of entirely and the 3 stocks that I went ahead to double down on. A video you're not going to want to miss out on. Make sure you watch it through and through. And just before we dive in, tap on that thumbs up button, as it greatly helps me out in growing this channel. If you haven't already subscribed, go ahead and make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. So as mentioned, in regards to the stock market, we are certainly taking steps forward. However, we're also taking many steps backwards thereafter. And from a week-to-week standpoint, we get these market rallies only for the market to come right back down. Now, it has been and remains abundantly clear that the market sentiment is largely determined on the Federal Reserve's tone and attitude in regards to interest rates. And when Powell speaks, the market certainly listens. He stated this past Friday that it is appropriate to move a little more quickly when questioned on the Federal Reserve's stance, and continued to share that a 50 basis point rate hike is actually on the table in the near future.
I think markets are processing what we're saying. They're reacting appropriately generally, but I wouldn't want to bless any particular market pricing. The thing I want to say, though, is we really are committed to using our tools to get 2% inflation back. And I think if you look at, for example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does point, that points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting, but I would say that 50 basis points will be on the table for the meeting.
His remarks sent shock waves of fear rippling through the market and sounded the buy alarm, at least on my end, to make moves on positions I am focused on growing. But before I get to those 3 stocks that I've doubled down on, I want to talk about that 1 stock position that I've actually sold out of entirely. It is Fastenal Company, ticker symbol FAST, which is the largest fastener distributor in North America. Fasteners being nuts, bolts, pins, and anchors, among a plethora of other products from hardware to abrasives and adhesives. Since Fastenal's founding in 1967, they have experienced tremendous growth, performing well year over year, as they now sit with a market capitalization at $32.39 billion, and with a rich dividend history of 21 consecutive years paying and increasing their dividend, with a current dividend yield sitting at 2.15%. By no means am I saying Fastenal is a bad investment, but I sold out of my position to trim down my portfolio and focus in on better investments and opportunities that I feel will ultimately deliver a stronger return on my investment. So after selling my 3 shares worth of Fastenal, I profited 52 $52.03 and walked away with $170.49 to invest elsewhere, which I went ahead to double down on Bank of America, ticker symbol BAC, which is America's second largest bank by total assets, totaling just over $3 trillion. Now, Bank of America had amassed a banking empire of 4,600 retail banking financial centers with over 16,000 ATMs across the United States. Since Bank of America, as we know it, has been founded in 1998, it has become a shining example of a financial leader in generating a market capitalization just north of $308 billion. Yet since the onset of the pandemic and following suit with banks across the board, Bank of America's stock was hammered and fell to a low of roughly $20 before climbing back up to a 52-week high of nearly $50 a share. Yet as we speak, it is down and off that 52-week high, trading for $37 a share, which is about a 26% change. With a PE ratio sitting at 10.70, I would say it is quite a steal for the value investor out there, especially as the Federal Reserve goes to jack up those interest rates. Banks and other financial sector investments will surely make their comeback, which is exactly why analysts foresee a median stock share price for Bank of America at $49 per share and a high stock share price for Bank of America upwards of $66 per share. And with that dividend yield at 2.12%, you better believe I scooped up another share amidst this volatility. I did so for $39.43, bringing my total share count of Bank of America up to 32 total shares with a 100 share count goal in mind. In regards to the next position I wanted to double down on, let's talk about Johnson & Johnson, ticker symbol J&J, the world's leader when it comes to healthcare and more specifically medical devices as well as pharmaceuticals. As I am sure you are all well aware of, Johnson & Johnson will be rolling out their consumer goods segment and keeping the medical device segment as well as the pharmaceutical segments underneath that J&J name. With a 135-year rich history, Johnson & Johnson, in my opinion, is the strongest healthcare investment that one can have within their portfolio, with their current market cap sitting at over $478 billion. Just this past year alone, their medical technology segment actually experienced a 16% growth spurt despite the supply chain challenges and the slowdown in sales from elective surgeries being delayed. Not to mention, Johnson & Johnson's new CEO delivered very optimistic news with confidence that over the next 10 years, they will be even more transformative than the last century. Johnson & Johnson isn't necessarily undervalued at this point in time, with their share price hovering around $181 per share and their PE ratio at 24.45. But in the words of Warren Buffett, it is far better to buy quality companies at fair prices than fair companies at quality prices. So I did score 2 more shares worth of Johnson & Johnson with a purchase total at $364.44, bring my total share count of Johnson & Johnson up to 38 total shares. And I'm going to continue to dollar cost average my way into Johnson & Johnson as analysts foresee a median stock share price at $188.50 and a high stock share price at $215 per share. Now, until it reaches those high stock share prices, I'll just collect on Johnson & Johnson's very stable dividend, coming in at a dividend yield of 2.31%. Now, finally, our third stock that many of you can probably already guess if you've been following along on my journey thus far, I went ahead to double down on and invest into Vanguard's Total Stock Market Index Fund, ticker symbol VTI. Now, this particular fund, in my opinion, is just a fail-safe strategy that I deploy with every single bout of volatility, allowing an investor to invest into 4,124 stocks ranging from small, mid, and large caps, both with growth and value plays. The fund even has an average dividend yield at 1.24%. So with each volatile day last week, I went ahead to scoop up a share worth of VTI, averaging $217.59 a share, and bring my total share count up to 44 total shares. And again, only an investment that I will forever be doubling down on, as you simply cannot lose by investing in the entire pie. Now, YouTube, that wraps us up for today. After selling out of Fastenal and buying more shares worth of Bank of America, Johnson & Johnson, in the entire stock market with Vanguard's Total Stock Market Index Fund, spending a grand total of $1,056.65, and will likely be going to town again this week, depending on how volatile the market gets. But if you liked what you heard, you learned something new, perhaps you have these stocks within your portfolio, or you just want to share what you've been doubling down on, drop all those comments down below. I'd certainly love to read through them. Now, YouTube, before we get going here, tap on that thumbs up button and help me grow this channel. And of course, if you haven't already subscribed, and make your way over to doing so, I'd certainly love for each and every one of you to be on this journey with me. And until the next video, YouTube, I will see you all there.